Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, it's Friday. We made it to the end of the week, and what an exciting week it was. We had NVIDIA earnings. We had the Jerome Powell speech, which just ended about an hour ago. What's the stock market done today? It's been all over the place. It's been up. It's been down, up and down. Right now on the Dow, we're up about 140. On the NASDAQ, we're up about 20. But this market is very volatile today, swinging both directions, trying to actually decipher what Jerome Powell just said. Well, he said he's going to keep those rates up higher for longer. Okay, so that could be taken either way. Maybe they were going to come in, maybe we're going to go up. All right, so we got the 20-day moving average, 44.50 on the S&P, right? So we came up and we hit it, and then we pulled back off of it. So we failed. This market's coming in. We're starting to go lower. Now, we may take another run at that 20-day moving average, but as long as we don't get above that 20-day moving average, I think we'll come down to the 200-day moving average, which is sitting right around 4,100 on the S&P. We'll see how that plays out. Maybe you're one of the moon boys that think we're going to the moon. That's all right. You can have that opinion. My opinion, stock market's going to come in. Let's get over to the real estate market. A lot of stuff going on in the real estate market right now. All right. So the chief economist, it's always the chief economist, it's never the low economist. It's the chief, the top economist at the National Association of Realtors. And he came out and he told us that the July sales numbers were the lowest since 2010. The lowest since 2010, meaning the real estate market is locked up. It's very slow. What was going on in 2010? Well, that was the Great Recession, right? So we are at the lowest rate of sales since 2010. That might tell you something as to where the market's going to be heading. But now we got the chief economist. Once again, it's always the chief economist at Realtor.com, Daniel Hale. She came out and said that, well, rents are coming down. Rents are coming down, right? Okay. So rents are dropping. All right. Well, that's interesting. And we're going to talk a little bit more about that. Where I live, it's about half as much to rent a house as it is to buy a house. So rents are about 50% expense-wise as it is to cost to buy a house. All right. Now, what's going on? Why is that? Why are rents so much lower? And the rents are dropping and houses are way up here. And a lot of people think when you buy a house that you're locked into one payment over the course of 30 years, right? You're locked in. Well, that's not really the case because you got property taxes. That's going up. You got insurance costs. That's going up. You got HOA fees. HOA fees are starting to skyrocket. Those are going up. You got expenses. If you need a new roof, man, it's expensive to put a new roof on. Just having one done on a house that we're getting ready to sell. Anyways, roofs are expensive. And if you want them to put gutters around the roof, it's ridiculous. Anyways, that's a whole nother story. But all right. So what do we got now? Well, Redfin, now I don't know if it's the chief economist at Redfin, but Redfin came out and they said that investors are losing money. 1 out of every 7 investors that are selling properties now are selling them at a loss. All right, that's interesting. So let's say you bought a house for $450,000, right? And you're an investor, you're a flipper, let's say, and you put $50,000 into that property. It takes you a little bit of time, a couple months. So you buy it for $450,000, you tie up your cash and you put more cash in, another $50,000. So you're into it for $500,000, but you can't get it sold. You listed it for $550,000, but no one bought it. $500,000, no one will take it. You're down at $480,000, but you're into it for $500,000. And it's a lot worse than that. Yeah, you end up selling it for $480,000. Sounds like you took a $20,000 loss, but no, it's much worse than that. You got commissions, you got cost of closings, you got a big loss on your hands. You got another $40,000 or $50,000 to add on top of that. So you bought all this, put all your money to work, bought this property, invested in the property, fixed the property up really nice, and you did it all for $70,000 loss. That doesn't sound fun to me at all. Now, a lot of people think that investors are going to be the ones coming in to buy all the houses up. Well, I'm telling you, investors, they're getting out of the market. The iBuyers, the investors, the Airbnbers, all those poor Airbnb people, they're really starting to take a hit. I mean, they're having vacancy rates at 50%, right? They're not renting out their properties as often. And you see what happened with the Airbnb people. They buy 2, 3, 4 properties, right? Because that's how the courses taught them to do it, and they do it on leverage. But they would base the leverage on a daily rental fee. A daily rental fee, and yeah, the income stream looked great if you can have it rented out every day. But you can't. It's not happening. There are not enough people to rent these homes. There's millions of these homes available for rent. So they're not getting the money they need. So they're holding on by a very thin string. They're going to be dumping these properties onto the market because they're hurting. They're not making the income they need to pay their mortgages on this. See, now the flipping world, the investors that are flipping homes right now, they're losing money. They're putting them on the market at losses. And the iBuyers they're all running for covers. I mean, they've already, like Zillow's left the market. Redfin's left the market. Open Door, I think, is another one that's going to be leaving the market soon. These iBuyers are running for cover. Now, here's the interesting thing. A lot of their properties are sitting vacant. You see, there's all this shadow inventory out there, if you will. Shadow inventory is inventory that's not dumped onto the market. It's vacant homes. You realize there's 12 million vacant homes in the United States. 12 million. Okay, so we got 12 million homes that are vacant. We got another 20 million that are owned by investors. I mean, yeah, there's some overlap in that, but let's just call it 25, 30 million homes that could come onto the marketplace, because investors, they're starting to get smart. They're starting to go, hey, guess what? I can just put my money in a CD at 5 or 6%, sit on the couch, do nothing, just collect my money instead of dumping it all into these houses that are going down now. And so these investors, they want to get out. They want to dump their house onto the marketplace. So this is shadow inventory. A lot of builders out there right now, they built these spec homes, right? But these spec homes are sitting vacant because they don't want to dump them onto the marketplace all at once because they feel they're not going to get the money out of the spec home, the amount of money it costs them to build that spec home. They don't think they can get it out. They're waiting for Jerome Powell to pivot so the house prices will skyrocket. Now, all of you know, if you watch this channel, that's not my take. When Jerome Powell pivots, he's going to be pivoting for a reason, and it's going to be the house prices starting to go down. Now, nobody wants to put their house on the market when house prices are going up. Why would you put your house on the market this month if the house price is going to be worth more next month? You just sit on and watch it go up. But when house prices start to go down, that's what they're starting to do. They're starting to drop. That's when the flood of inventory comes onto the marketplace. Now let's think about this. All right, so we got the rents right now about where I am, about 50% of the cost to buy a home. Okay, now if you get inventory coming on and you got rents dropping, let me think, what direction do you think prices of homes would be going? Well, they'd be coming down. That's correct. You're not a moon boy. You know that they're going to be coming down. Billy Bob, he got out at the top. He knows that they're going to be coming down. So the price of rents are coming down, which is going to send the price of homes coming down. Now, if rents were going up, if rents were going to double, maybe the home prices could stay up here. But rents are not doubling. You see, right now, we got all these apartments coming onto the market. There's over 1 million units coming onto the market. They've overbuilt the apartments. They're going to dump these million units on. What's that going to do to rent? Well, it's going to bring the rents down. The other thing that's bringing the rents down is people being locked in at that 2.8%. When they're locked in at 2.8% and they get transferred at a different location, well, they don't want to give up their 2.8%, so they feel they'll just make their house a rental because they can't live there anymore because they got to go work in a different place, maybe across across the country, maybe just from Northern California to Southern California. But they got their job transferred, right? But they don't want to give up their 2.8% because the house they're going to be buying is going to be at a 7.5% interest rate. And they don't want to give this up, so they make it a rental property. So a lot of people are putting their houses on the market as rental properties to hold on to their 2.8% rate. Well, what's this doing to rents? Once again, rents are coming down. It's not me saying this. This is the chief economist. The chief economist, Daniel Hale, Realtor.com. Anyways, rents are coming down. And that's going to be very much pressure on the housing market. The pressure on the housing market's going to start to come down. You see, people are actually running out of money. They don't have money to pay their mortgage. They don't have money to even make their car payment. That's why the cars are all getting repossessed. But they don't have money to pay their mortgage. They can't afford it anymore. They're at what's called house poor. Yes, they own a house. Yes, they're locked in at this very low rate, maybe 2.8%, but they don't have the money to make the payments for the property taxes, for the HOA fees, for the expenses of owning the home. They cannot make their mortgage payment. People are running out of money. Do you realize 50% of Americans right now, when they get a credit card bill, they can't write a check for that credit card bill each month. So they have to pay a 25% interest on their balance because they don't have the money to pay their balance off. And what's happening with defaults on credit cards right now? It's going through the roof. Banks are tucking away billions of dollars because they see this happening. They know that they're going to have losses on these credit card bills because people are going to default. People are starting to default right now. They're out of money. They don't have a way to get money. In the old days, we could just refinance the property, right? Well, right now, if you go refinance the property, you go from 2.8% to 7.5%. If you have to refinance right now, you're already in dire straits. You're probably not even going to be able to qualify for the refi because it sounds like you're desperate for the money. So some people, yes, some people are getting HELOCs. HELOC loans, home equity lines of credits, and those home equity lines of credits are expensive, 8, 9, 10%. Very expensive. Depends on your credit score. Depends on how long you want the equity for. You're trying to pull that equity out of your house. And that's the only way to tap into the equity in your house is with a 10% HELOC home. Yes, that's half the price of a credit card, but some people can't qualify for the HELOC loan, and they still have a little bit left on their credit card, so they're maxing that out. Look at days on market right now is expanding. That is how many days it takes to sell the house. We're over 3 months of supply right now, almost 4 months of supply in houses. There's no shortage of houses. 12 million are vacant. 20 million are owned by investors that want to get out of this market. People see the writing on the wall. Look at, in 2008, there were BlackRocks, there were Blackstones, and these people were running for the exits. They had to get out of the money, and they lost billions and billions of dollars, and they're going to lose billions and billions of dollars again. 1 out of 7 homes right now are being sold by investors are already underwater. They're selling at a loss. And if you go to cities like, well, Las Vegas, like Phoenix, these are 20 and 30% of investor homes are being sold at a loss. This is bad. This is bad. Investors are selling as fast as they can. Airbnb people, I feel so sorry for them. They're holding on by a thread. They don't know what to do. They were told they were going to make all this money because everybody was going to come and rent it every night from them. And that's not happening. So they don't have the income. And their mortgages are at high rates. They're not at these low rates because they're have 2, 3, 4 of these properties and they just want out. They just want out. They're losing their butt, literally losing their butt. It's sad for them, right? But they went in and they took too much risk. They got too levered. I know. I've been there. I've been there where it had 3, 4 houses all levered up and I couldn't make the payments. What did I do? I started selling them as fast as I could and it was hard to get out. But if you get out right now, you can still get out at a price as close to Billy Bob. I waited a little bit too long, and when it starts dropping, the whole market locks up. It's like a credit freeze. You cannot sell sell at any price. You see, homes, once again, are sold on the margin. The first guy makes it out. Billy Bob got out at the top. The next guy makes it out with a little less. The next guy a little less. But once it starts that downward spiral, it's hard to get out at any price. And that's why sales are so low right now. They're as slow as they were in the Great Recession. You have to go back to 2010 when we were in the Great Recession to find a time that was this slow. The market is locked up. The market is frozen. Things are going to get really tough really soon, really fast. Yes, in your area, you can still make it out because your area only goes up. Your area has multiple offices. And I get that. Your area is a great area to live in. But most of the country doesn't work like that. Las Vegas, Phoenix, Texas, all of these underwater, about 1 out of every 3 homes being sold by investors in those areas are being sold at a loss. An investor wants out. He wants to get his money out. He wants to put it into CDs. He wants to put it into treasuries. Look, there's a major crisis going on in the banking still. There's bank runs, right? I mean, these banks are losing deposits. They're losing them every week. 100 billion. The deposits are going out of the bank. They don't have your money. They're offering 5.5% right now at my bank on a CD, trying to get new money to come in because they have to compete with treasuries. They don't have money. Money is fleeing from the banks. All these banks are being downgraded. This is going to lock up real estate. This is going to freeze real estate. What happens when it's frozen? You can't get out at any price, but someone's going to have to get out. Maybe they go through a divorce and they have to sell, right? They have to sell. So they take whatever price they can get. And that price is going to be very low. And if you're their neighbor, you're sitting there saying, hey, my house is worth $1.5 million. Well, they just sold at $1 million. So I don't think your house is worth $1.5 million anymore. But it is because I say it is. Well, you can say it is all you want, but that comp of $1 million is the new price for your house. A lot of people don't understand it. Anyways, I just started rambling away here on a Friday. If you like this stuff, give me the thumbs up. Why not, everybody? Get out there. Have a great weekend. I'm Tall Mike. Bye-bye now.